Welcome back uh, to Markets Kya Lagta Hai. I'm doing this after a long time, and there is a reason for this. We have seen one of the deepest correction in last few years, 5 6 years, and post that now we have also seen very nice recovery, and a lot of people are wondering, asking me, is the correction over? Where is it market going? What are the levels? And things like that. I should have done this little earlier. I did post it on my WhatsApp group earlier on these things. But sorry, I just have been extremely busy. I hope you understand that. So before we move any further, very quickly, the risk disclosure. Investing is risky and it is not for everyone. And financial success depends on many things. And we do not take any responsibility. We are not authorized financial advisors. So we are not here giving you any advisory. We are just trying to analyze the markets the way it looks like. So please don't take this as an advice to invest your money or to get out of the market or anything. You need to uh, learn, you need to train yourself and then make your educated choice. This video is intended only and only on getting interest and helping you learn little bit on Elliott waves. So, uh, yes, you may have your own counts and you may agree with me. And if you think this is the right way of doing it, you should make your own decisions and do it yourself. Let us start with the very high level picture. Look at every data that we have on Nifty and then see how we are able to analyze this. So beginning of Nifty, you could take it up sometime in 1994, 95. And from there, we had a very nice move all the way till 2007, which was a wave one. And then we had a very huge crack in the markets, which was wave two. Post that, a wave three has started, which I'm not going to be putting in any numbers at this point in time. So this is more for the purposes of approximation. And these numbers will keep on changing time and also the levels. And then we would have a fourth, and then we would have a fifth. Within this third wave, you look at now blue line. You had a wave one, which stopped its journey with COVID. And the fall, COVID fall was nothing but the wave two of that particular fall. And then we have seen one of the fastest and most aggressive rallies, which is the characteristic of wave three. And that is exactly what we saw all the way from 2020 till recent past. And we probably have not yet completed that journey, and we would continue that journey, and then there would be a longish correction because there has been a very deep correction into. So this four could actually be a very long correction like this. I'm not very sure. We will need to look at it when it starts. And then within that, I'm now going to get onto little bit of a lower time frame. 21 days is one bar here was 21 days. Now one bar here is 13 days. And if you look at the last piece, I'm just going to increase this and increase this. Okay. So within this particular period, if you look at it, and there are a few people who have little different counts than me. uh, you choose to have your own counts, but these are my counts. So you look at the black, you have a 1, you have a 2, then you have a 3, then you have a 4, and then you are in a fifth wave. And if I would talk about the third wave within it, one, two, three, four, five, and very, very similar to it, you can also see a one, two, a three, a four, and a five. Let me mark this with red color. This would be an intermediate wave, and this is how it would probably work out, in my opinion. And we are going to talk about why and how this red wave is coming along, and what are the possibilities of that. So what we have done is we have looked at it from the largest time frame, and now we have come down to around 13-day candles, and this is how it looks like. Now we are going to get on to weekly candles and lower candles. So now, if we get on to the next level of details, let me go to the weekly candles and evaluate this, the lower time frames. So I'm more interested in this particular time frame. I am not able to split this in one, two, three, four, five, which makes me confident that wave 3 has all the parameters. Okay, so one would paint something like this: one, two, three, maybe three, four, and five. If you are going to be driving this, wave 3 is not the strongest, not the largest wave, but wave 3 cannot be the smallest wave. So there is some mistake in this counting. So what I believe is happening is this 3 is not getting over here, but little later, and within that 3 you have got a 1. You could we could get into the details. When we get into the details, we will evaluate. And then this is a 4, and now this is a 3. Let me put it in color blue. Mark it as minor wave. Okay, so if I put this something like this, then it fits in pretty well, and within that we are also able to get 1, 2, then 3, expanding triangle, and 5. If we do counting like this, it looks like it is completely acceptable levels, and this is how I would count it. So now I'm getting into even more details, and those details I am going to be doing in on my trading chart, which has got a lot of levels, a lot of identification. Uh, I'm sure you will be able to understand, but it gets little more messy, little more crowded. So please bear with me. And here is the crowd. Okay, so don't worry about it. We talked about this as one, this as two, and then a third one, and within that third we talked about one, two, three, four, and five, right? And I'm not getting into too much of details on why this third was over. And we did do some sessions at that time, and we did identify this third very accurately, actually. And then we have been looking at the bottoms, and I did mention many times that it's not the time to invest, and then it was probably a time to write options, not even a time to sell your stocks, because we were in fourth wave. In fourth wave, you usually do not exit your investments. But anyways, that is what was there. But now we are interested in understanding this fourth wave. Okay, and if you want to understand this fourth wave, let us first look at the ABC pattern. And if you look at, okay, before the ABC pattern, let's look at the levels. So if you plot Fibonacci on the wave 3, you get 50% correction to around 22,600 levels, and 61% correction to around 21,700. So this was a range that I was expecting my corrections to fall. Okay, so that was my first expected range for my corrections to fall. Now, let's look at ABC correction. So now in this, you are able to see a very nice A, a very nice B, and a very nice C. Now for A, C is equal to A, my level here was 21,830. So I was expecting the markets to come around these levels. So if you see, this was the arrow drawn long, long, long back. Hmm? Expected levels for markets to come along till these levels, and this was the expected ABC. Let's go in little more details, and if you compare the B, B correction on the fall of A was exactly 50%, very close to 50%. Okay, so that was another level that we expected, and we did mention that there is a possibility of a further correction coming in from here. And we did look at the huge fall actually. If you look at it from 24,800 to 24,900, we came all the way to 21,900, almost four sorry 3,000 points of fall. Not bad, and a lot of people were able to make a lot of money shorting this market. And beyond this, now if we need to get conviction as to if the calculations are correct, if things are going correct, let me go to a little lower time frame, which is a 2-day time frame. So 2-day time frame, one candle is made up of 2 days. Now here, what you would see is a very clear 1, 2, 3, 4, and 5. On the B, you are able to see A, B, C, very nice. And on this particular fall, you need to look at red. I'm going to reduce the darkness of this black so that others become visible. And this guy, the blue, which is ABC, I'm just going to reduce the darkness, not going to delete it. So if you look at it, in this, you had a 1, 2, 3, 4, and 5. Very, very nicely coming along. And within this, now, if I need to go to the last one, let me put in a vertical line in here and to daily time frame. So if I would look at this, daily time frame is not doing all the justice. So allow me to go to a lower time frame. I'm skipping few things and I'm directly going to 25-minute time frame. Okay, so we were here. Okay, where here, 24,900 odd, and you are able to see a blue color, very nice 1, 2, then 3, 4, and 5. In this 3, you are able to see very nice 1, 2. This is a very nice fall of 3, 4, ABC 4, and then 5. This also has a 1, 2, 3, 4, 5. Very nicely put in. This 4 has got a very nice ABC pattern. And then this last final 5 is also, you are able to see 1, 2, 3, 4, and 5. Within this 1, 2, 3, 4, 5, you are able to see a very nice, just going to draw this because it's the closest one, 1, 2, 3, 4, and 5. Okay, so you are able to get all the way till this 5. Only thing that did not happen was this level of A, C is equal to A. Only thing that did not happen was 61% correction. And many, many, many a times I have observed that markets go ahead of their times. Although there are a lot of investors, traders waiting for these Fibonacci levels, markets does not give them opportunity. So what we do when we are in these kind of things, your levels are approaching, you put a stop loss below these levels and start buying. You are going to see a vertical correction most of the times if your counts, and you look at it, we looked at the complete nifty time frames, and we knew that there is a very high probability, this is a high probability zone where the markets will react, and then all the way from there we are able to come down. And this is, if you look at the levels, we started with grand super cycle, we had super cycle, we had cycle, so three, then primary, intermediate, minor, three more, six, and then minute, minuity, sub minuity, nine, and then on top of it, this is just now we drew, which is beyond minute, sub minute, it's micro. So all the way 10 levels we have watched to come up with this particular finding. One thing that did not happen here is if you go even one level down, then the last fall is not shown as a 1 2 3 4 5. It's more of 1 2 3 fall. And in rare cases, rarest of the rare cases, wave 5 can be a three wave series, a 1 2 3. Here there's just 1 2 and 3. Or some people alternatively say that the fifth wave does not have any split, so there is a 4 and there is a 5. It happens at a very very small time frame, 5 minutes, 3 minutes, 2 minutes. You may be able to see these surprises. Anyway, that's one part of the story. So we had at least one, two, three, four, five time frames telling us a story that we are going to finish our downfall. That is where you get confidence to do what you do in the trading. Next one is what happens beyond that. Okay. So to look at what happens beyond that, let us evaluate how we would expect the markets to go. Hmm? And for this, let me go to a daily time frame. Actually, 2 day time frame would have been little better, but we could also do it in daily time frame. So now, the idea is that this particular guy who was, I think this guy was, wow, somehow the color has vanished. This red, उसके ऊपर ये blue था, ये black था. Okay. So, did I color the correct guy? No, I did not color the correct guy. I let me go to 2 day, and it is this guy. No, yeah, this is the guy. 1 2 3 4 5, and we had reduced the brightness of this. And if I go into this particular guy, we would expect this fourth wave to finish with a fifth wave, right? Now, can I have expectation on my fifth wave? So to do that, I am going to zoom in. Thanks for your patience. I'm doing this little slow so that it gives you an opportunity to understand how this is done. So let me go to fib retracement and plot this. And I'm not going to be very, very accurate in here. And then click on this, remove all these, 1, 1.27. These are the very high probability zones for the wave fifth. Okay. Now, if the wave fifth has to finish, it would either do a double top. I don't think it will do a double top because we are in the wave three. Within wave three, usually you don't see the double tops, higher levels. We are in wave three. So we could do 1.27 or even higher. Now, if the markets have to go to these levels, what I would expect is a wave one, which would be of something like this size, a wave two, which could be a deep correction, then a wave three, which will give you the maximum win, and then wave four and five. Correct? So this is something that I would be expecting. Let me put this. I'm going to mess up my color schemes a little bit, but that's okay. So this is the blue color. Hmm? So this is how I expect the markets to come along. Now, to have this wave one is also going to be split within different levels, right? So how do you see this? And we are right now on 2D. Let me go down to a little easier time frame. Let's say we'll go down to 25 minutes and try to identify right from the beginning. Hmm? So in this beginning, you would not be able to make sure that whether if it is turned around and the markets are going up, because you were counting this as one, this as two, sorry, there was this four was here, and you were counting this as one, two, three, and then probably a fourth, a diagonal, and a five, right? I was also doing that, but the market's surprise, market rather than going down, it came sideways, and then they went up. The movement on 25-minute, I see a clear higher high and higher low. Then my count changes, right? And then I came up with these counts, which is in the small blue line, one, two, three, four, and five. Okay. Earlier, the counts were like this, four and five. But then when the fifth wave started coming along, and we had this fall here, I changed it to this because within this level also I'm able to plot 1, 2, 3, 4, 5. So this goes into a color black or color red, for you to understand. Hmm. So this was the first wave, and then within that wave, here you have the second wave, and beyond that, there is another wave which is starting here, which is in red. So we have a one, and then a correction, which is supposed to be a very nice, interesting correction type. This is usually not seen in wave twos, but we saw that. And this is called a triangle correction. Triangle correction is always five wave, A, B, C, D, E. The moment I was first expecting A, B, C because it's a wave two. Wave two is a deep correction, and C should have gone down, and then we could have gone up. But the moment it started going up, made a lower high, and then came back here, I fairly had an idea that we are going A, B, C, D, E, and triangle corrections don't add any more complication to it. So after the triangle, the correction is over most of the time. Hmm? So this was second level where I mentioned to a lot of people on my WhatsApp, saying that please be careful. Now is the time to do the investment. So investments, if you were a long-term investment, you had a time all the way when the markets were coming down closer to your 0.61 levels, or if you would have missed it, you have a higher high and a higher low which is getting created, and this sideways market was a perfect time to add on to your investments. Beyond that, the market started going up, and this is how I think they are going up. So next wave is this blue wave, and in this blue wave we have this one, this two, and then we are doing a longish three. Okay, and within this three, uh, this level, there's some level here. I will have to check this. Within this three, you are able to see uh, this particular, the red one, red one which ends here, 1, 2, 3, 4, 5. If you look at it here, the wave 3 is the most aggressive but not the longest. Here, wave 5 seems to be more like an extended wave, which is a longish wave, but not the aggressive one. And then wave 5 seems to be going along like this. You have a 1, you have a 2, you have a 3, and most likely we are in fourth. So now this fourth, I really have no clue whether it will go sideways or whether it will go downwards. But from the rule of alternation, because the two wave was sideways, the fourth wave could go down, and then we might actually go in here to my expected level, and that's where my wave 3 on this blue line will get over. Beyond that, you would have one more correction, and then it would go up again. So if you are looking at another time to invest in the market, again, this could be a good time when markets are going to be sideways for a certain duration. And then beyond that, we are going to complete the wave 1 at the high level, which we drew on daily time frame. So many lines. Okay, interesting. You need to put in hard work. Without putting in that hard work and without understanding where exactly we are going or where exactly the markets are going, it becomes extremely difficult. So this was 1.618 level for this one, and that's where we expect the markets to go in here in this particular move. And then beyond that you would do get a correction. After the correction, you would again go up. I'm not sure where it will end, but it would do something like this. And for that, we can always draw uh, other Fibonacci level. So this is Fibonacci level for the higher level. So I would not be surprised if the 3 here ends, but doesn't look like. And then uh, beyond this, there would be there's actually a possibility that the 3 will go do a little higher than this and then come back. And there is a very, very high possibility that the markets will revolve between these two levels. The first level is 23,450, 4,444, and the second level is somewhere around 23,050. So but there are certain levels here which I do follow. Little difficult for me to explain on this video, but there are levels which I'm expecting the markets to revolve before it breaks out. And when the markets confirmed to be broken out, you would see one more lower, uh, one more uh, higher low, and then the markets will jump. Okay, so when the markets go beyond these levels, beyond this top, whenever the top is printed, you will know the level. I cannot predict exact levels, uh, but whenever markets goes beyond it, it's going to be having a wave 3, and that is going to be wave 3 of 5, which is going to be extremely fast. Okay, and you might not want to miss that as an investor. If you are investor, that's my opinion. I have already started putting in my cash into action, uh, getting in into equity again, and I would probably do again here in this sideways market or in this sideways market, so that I'm going to get benefited by this move. But in at a high level, I believe the markets are going towards 27,500 odd levels from here, and for that, I can comfortably put a stop loss oops, sorry, stop loss below these levels, and that is going to be, I'm also going to plot that stop loss level. So if I am able to have a stop loss below 21,650, I can comfortably uh, try and get these levels. So a stop loss which is around 3,500 levels below for a gain of around 5,000 points. If it works, do it. If it doesn't work, you can put your stop loss little higher. Uh, is the present low, but that's your risk. It's your plan, it's your risk, it's your money. So this is how I expect the markets to go in, and I expect the markets to have a directional bias now. With a very small time, it is going to be sideways, but beyond that sideways move, expect a faster move up there, and expect the move to start getting exhausted around 27,400, levels from here. That's it. Have a great time. Thanks for spending so much time with me, and enjoy. Cheers. Bye.